India's Commodity Derivatives Quiz Contest saw participation of more than 5,500 students representing 176 Indian institutes. After 2 exciting, engaging and nerve-wracking rounds, only 6 teams made it to the final gold round. Let's see who wins the race.
First, we registered for this competition and we participated in that quiz. It was highly competitive and we were really lucky to get through it. And right now we are very happy to be here.
It is definitely important because it helps us track the economy, and today with so many recent happenings happening in our economy, it is really important to track the commodity derivatives market.
It was a very informative journey, I would say. We had an initial bronze round where we had to answer 20 questions. And after that we were asked to choose 2 commodities to prepare on, and this expanded our knowledge about commodities in general.
Really, we have gone through the website of MCX and the websites and other online materials available in about CME, LME, and other intercontinental exchange and other global exchanges.
Thank you so much for coming here, all dignitaries, all the students. I'm very sure, I can guarantee it's going to be an exciting quizzing round where, of course, the 6 teams, the 12 of them that are here are, well, they're really experts, I could say, of commodities, but everybody in the audience will definitely take back home a lot of knowledge about commodities as well. Before we get into the quiz, I'd just like to invite first up on stage, I'd like to invite Mr. P.S. Reddy, the MD and CEO of MCX, to say a few words.
You know, when I look at all the youngsters, my student days are reminded, and not that we had such kind of contest. Maybe there were, but we were not aware. And as students in the classroom, we used to participate in this. And there's a lot of nail-biting moments. I'm sure you went through many such moments during the course of this conquest. And I compliment all the teams which have participated. And I wish you all the best in this round also. Thank you very much. Thanks to all of you.
I'd next like to invite up on stage Dr. Sameer Kulkarni. He's the Director, Innovations, Incubation and Industry Linkages Cell at Mumbai University. Dr. Kulkarni, if you could say a few words, please.
First of all, congratulations to all the finalists who have made it so far. With respect to Mumbai University, I am very happy that we are, the venue partners for this particular event, Comquest. Mumbai University, I believe, is probably one of the oldest ones. So, if you have been raised in Mumbai, I'm sure you have been part of Mumbai University here or there. However, so this particular university was initiated in 1857. So, believe it or not, we are now in the 163rd or 64th year of operations. And we have really crossed a lot of ground. And now we are at the next phase of it, where necessarily we are trying to ensure that whatever goes down into the education, the way that the education is imparted in this particular state-of-the-art colleges and this educational centers is coming up as application for the industry and the general society. Anyway, thank you very much for inviting me over here to say these few words. And once again, all the best to all the finalists. Thank you so much.
Next, I'd just like to invite up Dr. Aruna Deshpande, ma'am. She's the Director with ADMI at Mumbai University.
I welcome the guests, the dignitaries from MCX to Mumbai University. I represent Alkesh Dinesh Modi Institute for Financial and Management Studies. We have a long-term association with MCX, a long-term, I think 5 to 6 years down, where MCX has come to our campus, recruited our students for final and summer placements. MCX has also conducted a lot of commodity exchange awareness classes for our management students. We run a MMS course for management students. Our institute also conducts a lot of financial related programs. MCX recently conducted a faculty development program, to create the awareness about commodities and development for faculties, the teachers from Mumbai University. So more than 40 college students, college teachers participated in this faculty development program, which was highly appreciated by all the teachers, and it was very effective. Mr. Srikanth, who is the convener of this program, had conducted this session for us from MCX. Thanks, Mr. Srikanth, and thanks to the MCX authorities. Thank you.
I'd now like to invite up on stage our chief guest for the keynote address. May I request Shri Shankar Agarwal, the chairman of the MCX Investor Protection Fund Trust, to please join us on stage, sir.
I'm very happy that MCX, in collaboration with Bombay University, is organizing this kind of a quiz. And surely this quiz will light that sense of inquisitiveness. And unless we have got that kind of inquisitiveness in us, to understand, to know each and everything, we will not be anywhere. We talk about demographic dividend, but this will be nothing but some kind of rhetoric. This demographic dividend will be of use, and we'll be able to harness that only when we are able to impart good quality education and good quality skill. And I'm sure what you are doing today, surely this is a right step in that particular direction, and I'm sure that students will get enlightened, students will get little educated, and they will have new ideas, and they'll be able to create new knowledge and new products, and that will bring happiness and a smile on the face of everyone, including those who belong to the disadvantaged section of the society. And that will be true tribute to this country and to this institution called Bombay University. Thank you very much.
There are 3 rounds in this quiz today. First up, we have something called the Spice Round. There are 12 questions in all. That means 2 questions per team. We will work anti-clockwise. No negative marking. 100 marks for the right answer. All right. Here's our first question of the Spice Round. Which type of crude oil do you identify with this image? WTI crude, Brent crude, Ural crude, or Bonny Light crude?
It's B, Brent crude.
That's the right answer. Good job. Great start. Which commodity price graph from 2014 to 2019 has been captured in this graph? Your options are A, cotton, B, copper, C, crude oil, and D, gold.
I would like to go with B, copper.
B, copper. Wrong answer. It is actually gold. The answer is gold, but don't worry, no negative markings at least, so that's good. Faridabad, guys, here's your question. Now, the following commodity is highly exported to this region, the region that is marked in green. So you need to tell me the commodity. Is it A, mentha oil, B, cotton, C, cardamom, or D, copper?
C, cardamom.
It is cardamom. Moving up, let's go to my right, Mumbai, KJ Somaya. The commodity shown in the picture has a melting point of 40 degrees Celsius, and India is a net exporter. Sugar crystals, mentha flakes, silver flakes, or D, aluminium oxide crystals?
B, mentha flakes.
It's the right answer. Don't worry about that. It's mentha flakes. Let's move on to Visakhapatnam. The picture shows semi-finished and finished products rolled out of continuous casting. Now identify the intermediate products. Is it A, slab, bloom, cathode, billet? Is it B, ingot, bloom, billet, cathode? Is it C, ingot, billet, bloom, cathode? Or is it D, bloom, billet, cathode, and ingot? Yes?
C, ingot, billet, bloom, and cathode.
No, it's actually B, ingot, bloom, billet, and cathode. Let's move on to Delhi. Which is the largest producing country of this commodity in the world? Indonesia, B, Malaysia, C, Thailand, D, Vietnam.
Thailand.
So that's the correct answer. Good job. Let's move back to Pune. The global benchmark index for the commodity shown in the photo. this commodity derivative is largely imported by India. So which is it? Is it the A, Tokyo Commodity Exchange, B, Bursa Malaysia Derivatives Berhad, C, Indonesia Commodity and Derivatives Exchange, or D, Silence Future Exchange?
The answer is B.
That's the right answer. Don't worry, that's the correct answer. Okay, next up, Nagpur, here's your question. India exports this commodity significantly to these countries. So, name that commodity. A, is it black pepper? B, is it rubber? C, is it cotton? Or D, is it mentha oil?
It's A, black pepper.
Unfortunately, that's the wrong answer. The correct answer is C, cotton. Faridabad, guys, here's your question. Now, the most common metal used in the making of these items, is it A, zinc? Is it B, lead? Is it C, copper? Is it D, nickel?
C, copper.
Wrong answer. It's A, zinc. Let's move on to my right, to Mumbai. Which commodity is least associated with air conditioners? Is it A, copper, B, natural gas, C, aluminium, or D, crude oil?
D.
D, crude oil?
Yes.
That's the right answer. Correct. Crude oil. Good job, Mumbai. Let's move on to Visakhapatnam. Guys, on an average, how much content of aluminium is used to manufacture a passenger car weighing about 1300 kilograms? Is it 50 kgs? Is it B, 150 kgs? C, 300 kgs? Or D, 500 kgs?
It would be D, 500.
That's the wrong answer. It's B, 150 kgs. IMI Delhi. Now, this picture can be best associated in the production of this exchange-traded commodity in India. A, silicon. Is it B, sugar crystals? C, natural gas? Or D, aluminium?
C, natural gas.
C, natural gas is the right answer. Well done, guys. And Delhi is at 200, KJ Somaya 200, Pune is at 200, Faridabad at 100, and Visakhapatnam, Nagpur still to start their scores. But no worries. Ladies and gentlemen, once more, round of applause. Here are the rules. It's a buzzer round. You have the buzzers in front of you. The question I will read out. Unlike the first round, the options will come once I'm saying them out. If you get it correct, that's 100 points to you. If you get it wrong, minus 50 points. First question for this round. Sudden spurt in the price volatility of a commodity will lead to increase in A, initial margin, B, extreme loss margin, C, special margin, D, exposure margin. All right, Visakhapatnam taking it.
A special margin.
That's the wrong answer. Actually, initial margin, which is the right answer. Unfortunately, that's a minus 50 to you. Let's take a look at the next question. The uniform stamp duty is payable by A, seller with effect from February. All right, Pune, let's hear your answer.
The answer is buyer.
And do you want to complete it? There's a little bit more on that. I can't give that to you because it says it's buyer, but the important part is with effect from April 1st, 2020. Minus 50. Guys, let's move on to our third question in this round. Since when has SEBI started regulating commodity derivatives?
2015.
I need more information than just the year, my friend.
September 2015.
Okay, I'll give that to you. That was very bold playing by Nagpur. Next question. What is the name of the electronic spot market platform launched by the central government? Is it A, National Agriculture Market, B, AgMarkNet, C, Unified Market Platform, or D, EAPMC Mandi?
It would be the first option.
Which is?
ENAM.
Good one, Visakhapatnam. That's the right answer. You have redeemed yourself. Which entity is the major silver producer in India? A, Hindalco, B, Manganese Ore India Limited. Is it C, Hindustan Zinc? Yes, C. Good job, that's the right one, Mumbai. It is Hindustan Zinc. Which country has hedged all of its oil output in 2020? A, Mexico, B, Russia, C, USA, D, Nigeria.
Mexico.
Mexico is the right one. Good job. Let's move on. Which is the most common element in commodities like crude oil, crude palm oil, ethanol, and methanol? The options are A, oxygen, B, carbon, C, sulfur, and D, sodium.
Carbon.
Is the right answer, Nagpur. Good job. What does the symbol HGZO stand for at COMEX, the CME division? A, Copper July 2020 contract, Copper December 2020 contract, C, Zinc December 2020 contract, or D, Crude Oil December 2020 contract? Yes, Delhi.
It's B, Copper December 2020 contract.
That's right, it is Copper December 2020 contract. SEBI listing obligations and disclosure requirements, the LODR regulations in 2015 mandates disclosures regarding the commodity price risk and hedging activities in the dash section of the annual report of a listed entity. Is it A, auditor's report, corporate governance report, company financials? Yes, Faridabad.
Company financial report.
It is not that, it's the corporate governance report. Sorry, Faridabad, that's not the right answer. You will get a negative mark for that. You need to place the following regulatory reforms in the chronological sequence that pertains to commodity derivatives market. 1, mutual funds and PMS, futures on commodity indices. Category 3, alternative investment funds. 4, option in goods, integration of intermediary stockbrokers. Your options are A, 5, 1, 2, 4 and 3. B, 3, 5, 1, 2 and 4. C, 3, 1, 5, 4 and 2, or D, 5, 1, 3, 4 and 2. Yes, Delhi.
A, option A.
Option?
A.
Wrong answer, my dear friend. It is B, 3, 5, 1, 2 and 4. The second last question of the buzzer round. 2 more questions to go in this round. Arrange the benchmark exchanges against the following commodity contracts in sequence: gold and silver, copper, aluminium, coffee and sugar, iron ore and corn. A, CME, LME, ICE and Dalian. B, CME, LME, Dalian and ICE. C is LME, CME, ICE and Dalian. And finally D is ICE, LME, CME and Dalian. Who's going for it? Yes, Faridabad.
C.
C. Unfortunately, that's the wrong answer, my dear friend. It is A, CME, LME, ICE and Dalian. One more question to go before we close the metal round. Here it is. At present, minimum MPOR, which is the margin period of risk, day or days, on computing margin for commodity futures contracts is
2 days.
2 days. And yes, it is 2 days. Good job, Delhi. Well done. IMI Delhi 350. I am Vishakhapatnam at 150. KJ Somaya at 300. Faridabad 0. Nagpur 200. And Pune is at 150. This round is a rapid fire round. There'll be 1 minute on the clock. When the clock finishes 1 minute, if I'm asking a question, I stop. If you're answering, that question will not be counted. You need to, that's why you need to be quick. It's a simple round. The questions are yes and no. If you don't know the answer, you want to move to the next question, say pass. The 100 marks for a right answer, minus 50 for the wrong answer. I have all your 6 names in here, so I'm not going by any order. I'm going to pull a chit. That team will answer the first card, okay? So let's think. This is Symbiosis Institute, Symbiosis Center. So Pune, you're up. Premium paid by the buyer of both call and put option shall be blocked upfront on real-time basis.
Yes.
Price quotes in base metal and bullion contracts are inclusive of import duty and GST.
No.
Chicago Board of Trade Division of Chicago Mercantile Exchange Group offers light sweet crude oil futures.
No.
Mentha oil has shorter shelf life compared to cotton and palm oil.
Yes.
Commodity repositories are to be registered with the exchange to offer services.
Yes.
More than 2/3 of global production of nickel is used for producing stainless steel.
Yes.
Convenience yield is a key pricing factor for both commodity and equity futures contracts.
No.
Tender period margins are not... Okay, out of time, but good. You did 7 questions. Good job, Pune. Good job. Let's take a look at our next team. Who's it going to be? Visakhapatnam, Indian Institute of Management, Visakhapatnam. Short put position shall devolve into long position for the trader in the underlying futures contract on exercise. Say that again? What?
No.
Daily price limits are not applicable for internationally referenceable commodities. Quick.
No.
Platinum and palladium contracts are active on Singapore Exchange.
Pass.
Okay. Lead and aluminium are 100% recyclable and retain their properties indefinitely.
Yes.
Limit orders on the trader's workstation are placed to exit from an existing trade to minimize losses.
No.
As per regulatory guidelines, custodian services are mandatory for institutional participants such as mutual funds.
Pass.
The maximum loss to a short futures position holder and call option writer is the same. Quick.
No.
That's just in, and that's correct. All right, I'll give that to you. Next team, Delhi. All options of close to the money CTM are exercised only on explicit instruction by short position holders.
Yes.
The staggered delivery tender period would be last 3 trading days for all compulsory delivery contracts.
Pass.
The London Metal Exchange operates an inter-office telephone market for trading 24 hours a day.
Yes.
India's oil import dependence is around 95% of the country's consumption.
Yes.
Only current season Indian crop is deliverable in cotton contracts.
No.
India was a net exporter of aluminium during FY 18-19 and FY 19-20.
Yes.
Investor Protection Fund IPF is meant to compensate members against client defaults.
Yes.
All client positions are netted off against each other while calculating initial margins.
Yes.
Oh, no, I can't take that answer. I'm sorry, we're out of time. Nagpur, Indian Institute of Management, Nagpur. Final settlement price for options shall be daily settlement price of underlying futures on option expiry day.
Yes.
The minimum delivery period margin is 25% and is levied on both buyers and sellers.
Pass.
Chicago Mercantile Exchange provides for open outcry operations for all their energy products.
Yes.
Ceteris paribus, cotton prices are a function of supply and demand of crude oil prices.
Yes.
Seller has to pay buyer for replacement cost on default if average spot price is higher than settlement price.
Yes.
A jeweler can offset the price risk of his gold jewelry stock by buying gold futures.
Yes.
Both futures and option on futures contracts of same commodity will have same expiry day.
Yes.
LBMA metal prices are the benchmark for the base metal industry.
No.
On expiry day... Wow. Good job, guys. 8 questions to Nagpur. Who's next is Faridabad, National Institute of Financial Management. Daily mark-to-market gains and losses would be settled in cash for option positions.
No.
All base metal contracts are compulsory deliverable contracts and positions at expiry results in delivery.
Yes.
Shanghai Futures Exchange is a renowned Chinese exchange for agricultural commodities.
No.
Gold guinea of 8 grams and 1 gram coin of at least 999 purity are only deliverable on exchange platform.
No.
All agricultural commodities and metals are delivered through commodity repository account.
Yes.
Allocation of delivery intentions to buyers shall be as per pro rata allocation methodology.
Pass.
Commodity transaction tax CTT is applicable on sale transactions of all commodity futures.
Yes.
Gold ETFs can now have exposure to gold derivatives up to a percentage of net asset value in the scheme. Sorry. Out of time. Okay, final one. KJ Somaya, Mumbai. Here you are. Base price of options shall be previous day's daily settlement price of the contract.
No.
Additional margins are imposed on either buy or sell side in all outstanding positions.
Yes.
New York Board of Trade, NYBOT, now forms part of ICE US.
No.
All agriculture commodities are traded between 9 a.m. to 9 p.m. on domestic exchanges.
Pass.
Buyer will have an option on choosing the place of delivery on marking delivery as per allocation.
No.
Crude oil is one of the important feedstocks for fertilizers worldwide.
Pass.
The primary delivery center for copper is Ahmedabad, Gujarat.
Yes.
The maximum daily price limit for agricultural commodities is 3%.
Pass.
Candy is a measurement unit commonly used for cardamom.
No.
In India, an exchange... Okay.
Well, I clearly see we've got clear winners. Visakhapatnam 500, good job. Nagpur 450, Pune 400, Delhi is at 350, KJ Somaya at 300, Faridabad at 150.
We came here for the experience, but like winning this really makes us like aesthetic. It feels aesthetic.
We would like to thank MCX for such a nice experience and for giving us this exposure and making us come all the way to Mumbai for this competition. Thanks a lot.
Well, frankly speaking, I always had a thrill of trading in commodity markets in MCX. But this actually gave me thrill of quizzing. It was way excited as well as nervous, and it was really good experience for me.
We would really like to thank MCX for providing us with this platform because commodities is one of the segments in finance that is really underserved, and people really rarely know about what is happening in the commodities market.